right, stocks broke their one-day losing streak yesterday and continued to move higher after that 8-day winning streak. So now we have 9 out of the 10, and it's like 10 out of 12 days to the upside. Really strong move off of that August 6th low, continuing, especially in one particular area in the market. We're going to talk about that today. What's really driving this action and what's inside of that area of the market that's driving it, and how important that will be for us here in this next week as to whether or not we'll continue to push up higher to new highs or whether or not we'll kind of peter out here. So we'll break all that down in today's video, taking a look at the sector rotation, the breadth, how much breadth have we actually had? How much of a broad move has this rally been? So we'll break all that down as well, and when and where did a lot of these kind of the other areas in the market do so well that's got people thinking about how broad this is. And then we'll take a look at our expectations going into the end of this week and the rest of August into next week. So let's go ahead. And with our trade idea of the day, again, similar to previous videos, taking a look at a stock that's got a great looking chart, the chart that we would like to see the S&P have, and we'll talk about trading it. So let's go ahead and get started. Today is Wednesday, August 21st, 2024. This is the Market Outlook from MarketScholars.com. My name is David Settle. Before we get going too far, I invite you to subscribe to our YouTube channel. This icon here, the red subscribe button down below. Click the thumbs up icon to like our video. Comment on anything that stood out to you today. Join our website at MarketScholars.com for free. Follow me on Twitter for more content between the videos, and join our Market Outlook Facebook group that we've created. All right, if you're watching us on our blog, check out some of these other things over here on the right, including our Market Outlook live video. So I take a look at old trades, see whether we should stay in them or not. I put on today's trade already before the market closed during this class. Come down to the bottom, click the heart. It opens up this tab. Hit that like button there. Same thing here. Click this thumbs up icon. It opens up this tab. Hit that like button. Again, the more you do that, it helps get our content out to all of our followers on those platforms. So thank you to those who do this day in and day out. Those who don't, you can do it right now while you're watching with 1 or 2 really easy clicks. All right, let's start off taking a look at the S&P 500 with the market forecast indicator. As you can see, another update today. So however many that is, like 10 out of 11 days or something like that. It's just only 2 down days since the August 5th low point, but not as big of a update. So the near-term line continued lower, the momentum line dropped lower. So some drop in the range means drop in short-term sentiment. That's kind of the nature of that beast. The intermediate line has moved into the upper reversal zone, so that's a very good sign. And so if we were to kind of get a good breakout move to the upside like this, even though the intermediate line is in the 80th percentile, if our next big jump in short-term sentiment produces a cluster, then we can really feel good about the change in trend and a continuation of a move higher. You can see we are now slightly above that 2.5% mark, above the 30-day moving average. It did drop back down, so that is a little bit of a concern because it's yellow. But again, it's going to be like that when you're very first starting this dark green shading. When you first get above 80, it can still be yellow, as you saw over here, depending upon how far below you were. So it will turn back green the longer we stay above this 2.5% mark. You'd expect that would be the case. If we take a look at the NASDAQ 100, its intermediate line has now finally crossed market sentiment. It's in bullish territory. Again, still not in the upper reversal zone, so not as strong as it could be, but still looking pretty good. 3% above its moving average, but its short-term sentiment looks exactly the same. Momentum line back in the bearish territory, but not extremely oversold, so that's okay. Near-term line down, but still in the upper reversal zone, so that's okay too. So everything's looking and still above the intermediate line. So because when the intermediate line's between the reversal between 20 and 80, then we are susceptible to that bearish cross, and we're not at that point yet. Let's take a look at the Dow Jones Industrial Average now. So pull up the Dow Jones, and you can see again dark green shading in the green line. The intermediate line's rising. It's not above 80 yet, and again we are susceptible. We have slightly crossed over to the downside on the near-term line. But not too significant yet. The momentum line is in bearish territory, but again, not extremely oversold, so that's not an issue. So kind of a mix here between the S&P and the Russell, which has been far less bullish. The Russell was up 1.3% today, so a good rebound from yesterday's drop. back above a rising moving average. The intermediate line now finally above the 50th percentile. Still below its market sentiment line, but not very much longer. The near-term line is still above the intermediate line, so that's a positive development. Yeah, despite its decline, still in bullish territory as well. And like I said, the momentum line going from a, not necessarily extremely oversold, but pretty strongly oversold condition yesterday to almost right back up to the upper reversal zone today. So, a good opportunity there for the Russell to continue its bullishness to the upside. Now a 0.5% up above the 30-day moving average. So good patterns. Again, it's not like we're breaking out right now, and we are losing some momentum. As you would expect, the near-term rallies only typically last 7 to 12 days, and we've definitely been on that type of runs here on this particular near-term rally. So it is going to pull back, just like we saw over here. In this case, a little bit below the 50th percentile, and then you get a rebound, right? Then you get a rebound there. You get a couple little pullbacks as we were going sideways, and we get our breakout move. So that happens, right? We saw that over here as well. It went a little bit longer before you finally had your near-term pullback here, and then you rebounded for a new leg or two higher. So, now we're, that was a little abnormal in terms of its length. This one is kind of normal. It's actually a little bit on the long end of normal at the length of the near-term rally. So not surprised to see a little bit of a decline. And it doesn't have to be too big of a decline. It doesn't even necessarily have to even drop below 50. But once it gets below that intermediate, gets below the 80th percentile, then we'll see what happens on the rebound back up to the upside. Let's take a look at the weekly chart. Pull up the weekly chart here against. Continuing with that strong bullish move. You can see here, if I were to activate, now change what was a very big bearish candle to now a pretty decent sized bullish candle. You can kind of see where we're at here, about the same level. Pretty good sized candle, one of your bigger bullish candles that we've seen. Again, that started that reversal there, didn't last very long. Same thing, it started this reversal here to the upside. Same thing with this one, started that reversal up to the upside as well. And then finally over here you had a pretty decent sized candles that started that move up to the upside. So as bearish as that was, with the potential of starting a more of a corrective move to the downside, a rebound in 2 weeks back to the type of candle that starts new bullish moves, the very, very good turnaround for the S&P 500. We'll take a look at the 3 green arrow charts. Of course, you have 3 green arrows on the S&P and the NASDAQ. They're both yellow lines, so we'd like to get them green. Their MACD histograms are falling, so that's a little bit of a concern there, but nothing too major. Basically, again, you're going to get little near-term pullbacks. That doesn't necessarily mean that the intermediate run is over with. As long as we still have the 3 green arrows and you're back to 3 greens again on the Russell 2000 down there with a green line and a rising MACD, so that's a good sign. Looking at the moving averages, you can see the 8 and 17 now are clearly crossing the 30-day up there. The MACD histogram is falling, but still very high levels. The MACD itself still rising way above its moving average. You can see the 17-day crossing above both the 30 and the 50 for that matter. Not a whole lot of volume, not a big range, and a little bit of a long lower shadow. Long lower shadows are not as bearish as long upper shadows are, but they can be relatively bearish. You can see the range filling in about the same as the ATR, so pretty decent size range from high to low. Looking at some of these other oscillators, look at the DMI, and you can see again we're still not getting that bullish candle, that bullish reversal. In fact, it's kind of moving in the wrong direction. The positive, instead of crossing above 30 and starting to trend, it's actually pulling back down just a little bit though. So, again, this fluctuates, so that doesn't necessarily mean that we're done with the bullishness. And the negative line still hasn't crossed below 20, it's turned up, but again, it fluctuates. So one day doesn't change the trend. So we still can keep our eyes, still at least leaning in the positive direction there, even if it's not necessarily giving us exactly what we want. Same thing with the RSI and the CCI. The RSI is okay. Like to get pushed up towards 70, but at least it's above 60. Your CCI is not the best, right? We'd like to see it more above 150 to really confirm this breakout move, and we don't quite have that. And we'll see, if we were to fall, like here, we didn't have that, but we stayed in the upper quartile, upper third, for the good chunk of time. So as long as we stay up here before we get the breakout move, then we're okay. So far so good, at least in that regard. Again, just kind of looking for, the best possible. We're not getting exactly what we'd like to see in the case of, this is an 8% rally. You would think, that we'd have enough of a breadth thrust, enough of a thrusting type move to be like, okay, here we go. But, again, it's you can see we're not quite getting that. And so, it's not the greatest thing, but at least we're not like breaking down. You're still above the cloud. You have a negative rate of change, but that may only last for a day, depending. You can see by tomorrow, if we were just flat tomorrow, the rate of change will turn positive. So depending upon what the rate of change does now is during this decline. It's been 26 days since we've had the peak there on July 16th. We do have a weak bullish trend going. You're above 1, you're above 50 down there. So at least it's a weak bullish trend, even if it's not necessarily strengthening yet. And then finally, on the Bollinger Band standpoint, you are still slightly in the upper quartile. Again, it's not the greatest. The bandwidth is still very high. So it's kind of hard to be too strongly bullish like we were over here when the bandwidth is high until you get kind of a breakout type move. So that's the kind of move, and that might be the move. This kind of move here that finally got us going back last year, at the end of last year, and especially over here. But that kind of breakout move may be what we get. This was on the CPI report. That might be what we get next Wednesday when NVIDIA reports. So we get a good solid market reaction to that. Then we can have that type of breakout move where we get above the upper Keltner channel and we really start taking off. Despite, even with a big bandwidth and, and kind of the exact same pattern we're getting here, that's the kind of move we probably will need to see. You can see by the time we got that, we had pretty good positive momentum, similar again to what we have right now. So that's probably what we'll need to see to get above the Keltner channel and really get above these old highs and really get going to the upside again. Obviously, you can see NVIDIA. Well, we'll talk about that here in a minute. But NVIDIA is the big driver of the market right now, and that's kind of what I think we'll probably be stuck in neutral mode until we get to next Wednesday. Let's take a look at the intraday chart. Again, we did get a new 4-week high point, so we're still at 100 on the Arun. That's good, and you can see we did get a higher high and a higher low. We did not close above the prior day's high for the second straight day. So again, at least it's higher high and higher low, even if it's not the strongest bullish pattern. And at least it is the new 4-week range. So that's a good sign. The range is still really big until this low point starts to move up, which is not going to happen for at least until after the NVIDIA report. So as wide as the range is now, if the NVIDIA, if I go back to November 4th, it was kind of the same thing. It wasn't as wide. It was wider, but it wasn't as wide as it is now. But you can see from that point, with that move on the CPI, it got wider. And so that's kind of the idea here. We, even as wide as we are now, and it's not going to shrink because that high is going to stay. If anything, it's going to get bigger because that low is not going to move until after the NVIDIA earnings. So the rubber band is pretty stretched. We're close to 10% already. That's about as high as we got after that CPI report. So the rubber band is pretty stretched. So we might be limited, but we don't need it to be too big. We just need to be kind of a breakaway, another breakaway type gap move to get above this old high point. And that may be all we need to get going again. Taking a look at today's range and volume. You can see the range, again, just a little bit below the average, the volume well below the average. So that's bringing, continuing to bring these ATR and average volumes down. The ATR has been falling pretty quickly. It's kind of slow today because we were close to average. The volume had not been dropping very much because the volume really tapered off pretty quickly. And now you can see it's starting to pick up that decline. Again, the more those two lines decline, the more bullish we'll be, right? We don't want to see above average moves. Because we are above the moving averages now, so we don't need to see above average moves. Maybe one more if you were to include the gap, on a breakaway gap, but that's really all we need to see now that we're above pretty much all the major moving averages there. Finally, looking at the VIX. You can see the yields are falling across the board there. But if you look at the VIX right here, and the VIX is back above 15. It's above 16 even. So it was up today, even with the S&P up. The VIX was up 2.5%. Got up to close to 90%. Relative to the VIX 3M is still relatively low. The VVIX though is still above 100. So again, that's still pretty bullish for volatility. We'll see that, as I told you before, the VIX so far has held its 200-day moving average, and that's still the case. And it's kind of flirting back up above the shorter term, and we get back above like 18 and a half, and now we're looking at a renewed move to the upside. And if the VVIX were to get up above 110, then we're really susceptible to again, a type of volatility move we got the last time the VVIX was above 110. On August the 1st, we were at 111, I believe, on the VVIX, and you can see the next 2 days, on the 2nd and the 5th, the VIX just took off. It went from 18 and a half, and more than doubled in 2 days, with the VVIX at 110 when we were at 18 and a half. Now we're at almost at 110, and we're at 16. So we are susceptible to that kind of move. Maybe not to that extent, but that kind of move. The more we are, at or above that 110 level on the VVIX, it makes us more bullish on volatility, especially when it's, as I mentioned, still above its long-term average values there. All right, now let's take a look at what's driving this price action. Look at the 3-month returns. Look how fast the Qs have rebounded to having one of the highest 3-month returns among all the different asset classes. Now, granted, bonds right now currently have the high, along with real estate, the highest 3-month returns. So that's an issue right now. But the Qs have really rebounded up in a big way. In fact, since that time frame, since what would be August the 6th, since the August 5th low point, so starting on the 6th, you can see the Qs are the best performer. All equity asset classes. IWM is lagging, but all equities are doing very well. Gold is up pretty good with some drop in the dollar, but that drop is small. And you can see bonds are actually pretty flat from that low point. In fact, when you look at how things have moved from the August 5th low point, so during this initial drop, so the market peaked on July 10th. That's when the NASDAQ peaked. The S&P 500 peaked on July 16th right here. So the NASDAQ peaked here, the S&P peaked here. This is the dollar against the yen. Remember, that was the whole reason for the market really tanking, especially on the 5th, was the yen carry trade unwind. Well, you can see now we are almost back. The dollar has almost dropped over the last 4 days, has almost dropped all the way back down to that Monday low point. And then if you look at like the 10-year yield, so that's the dollar has gone down. If you look at the 10-year yield, where it closed on Monday, it closed at 3.78%, or we're at 3.77%. So it has made the round trip back down. So it dropped July the 10th, excuse me. Let's see, let's go to, this is missing some of the data, so let's go over here on this chart. All right, so July the 10th, this is a weekly chart, sorry. There's July the 10th right there. So this is where, again, the NASDAQ peaked and they started to fall. So you can see the yields fell along with equities. And then we bottomed out again at 3.78%. Well, we're at 3.77%. And then finally, commodities also fell along with stocks. There's the peak on 710 right there. And then from that point on, commodities fell along with equities and the dollar and the yield. And you can see on Monday, the commodity index closed at 2186. Well, today it's at 2189. So everything that fell along with equities have all made their return trip back down to Monday's low, except for equities, right? Especially the NASDAQ. Monday's low is right here, and we're up, we're up quite a bit. In fact, if you look at how much we're up over the past, especially the NASDAQ, and how much we're up over the past 12 trading sessions, which is how long it's been since we've had that decline. Monday's low point, I believe it's been 12. You can see how much we're up. Let's see, 1, 2, 3, 4, 5, 6, 7, 10, 11, 12. Yeah, you can see how much we're up there. 10, almost 11%. In fact, the biggest driver of this is XLK, and XLK is up 14% in 12 days. Just to kind of give you an idea of how big of a move this is. Here, let me bring it up on this one, because I actually have the line drawn already. Oops, not this chart, sorry. This chart, and we'll go XLK, and then we'll go to that 12-day. So there we go, 14%. If I were to zoom out on this, that's one of the biggest 12-day. I mean, since the March of 2022, when we also had a big run over 12 days, ended up peaking here at March 30th off of this March 14th low. We ended up peaking at a 14% gain, and then of course falling after that. But really, other than that move, the COVID low and the 2008 lows are the only other times in the last 20 years that the XLK has gone up this much in that short amount of time, coming off of this 10% decline, which also happened to be a pretty significant decline in a very small amount of time. So a big rebound. Of course, XLK, as I've shown you before, XLK has been the biggest reason why the markets have been as bullish as they have been. Let's go over here and let's look first at all the sectors on a daily chart. And you can see, okay, XLK, biggest winner right now. XLY is kind of moving up too, but XLK is your biggest winner. Everything else is moving down to the left. All right, if you take a look at the top 15 companies inside of XLK that make up 75% of XLK. So see how many companies there are. 50 companies in the ETF, or 70, excuse me, 70 companies in the ETF XLK, and the top 15 make up 75% of it. And you can see right now, there's a few stocks moving up to the right that are in the blue. AMD, Applied Materials, chip stocks, Qualcomm is kind of moving up there. But really, it's NVIDIA. NVIDIA's got the highest momentum. It's got the highest relative, it's improving on its relative strength. This is what it looks like here on this chart. All right, it's above its 50-day moving average. Again, strongest momentum that it's seen right now. If you look at it relative to the S&P 500, you can see how it's above all of its moving averages, above its 50-day moving average. You got some pretty good. It's still got a very strong long-term PPO. All these oscillators are relatively bullish, not the best, but they're all up relatively bullish levels. An opportunity for NVIDIA really to take off. It's highly correlated with the markets, the ratio. So when NVIDIA takes off, the market takes off too. So that's what's really driving this market. As you can see, it's all pretty much XLK, and within XLK, because this is all relative to XLK, within XLK, it's all pretty much NVIDIA and a little bit of Broadcom. And so that's kind of what we're seeing, right? And I think we'll continue to see, here's XLK, and you can see how all that momentum, we talked about all that momentum getting us to the moving average, but not necessarily getting us through there yet. Same thing that you see over here. You're not necessarily back up above, but I think it can get back up above if NVIDIA really nails its earnings next week and takes off. Now, if you look at how NVIDIA has done going into this earnings announcement, it's done pretty well, right? When you look at its market forecast and you look at, again, the last earnings announcement was back here at $95. We're up at $125. In fact, when you look at its 3-month return here on this chart, it's doing pretty well. It's up. In fact, here, let's look at it on the rate of change. You can see it's up 35% almost if you look at its rate of change. So let's go to 63 days. We can go a rolling 3-month window here. And put up NVIDIA. And it's not the highest it's been going into an earnings announcement. Here, the last earnings announcement here, you can see it's actually, we were lower going into this earnings announcement than we are now. We're at a 20% return. If you look at this one here, we are at a 36% return coming down from its highs. So now we're at a 34% return going into this earnings announcement. Both of those, you can see we gapped up and we really took off. The only one really that we didn't really gap up, and this one we gap up, we did not take off, which was last year's at the same time. When we went into that one, we were at a 43% return over a 3-month period, and we did not take off. And then at the end of the year, when we actually went down coming out of earnings. We went into that with only a 6% return. So, we're doing very, very well right now. Very, very high levels, and we're off of the peak that we had on the 3-month basis. But it's got to take a really good earnings report to build on this and take off again, kind of like that we saw the last couple of times. They were relatively big, and then we really took off. In this case, up to an 80% return on almost 100% return on a 3-month basis going into the beginning of the year. So we get that kind of move, and then the market's got really good potential of continuing to move forward. And until then, we're probably going to be in some kind of holding pattern because, I know there's been a lot of chatter about, this broad move, but the reality is we're not really getting a broad move. Since the low point, since that August 6th low point here, it's pretty much all been XLK. XLK is up 14%, almost doubling the market, and everything else is lagging. Now, if I were to go all the way back to the high point, the Nasdaq's high point, then you can see, okay, there's a reason why, because it was so far down. Again, going into the August 5th low point, you can see XLK was down 16%. So it had more room to. It's up 14%. It's still not back to break even. And you can see all these. Utilities and real estate never went down. Staples briefly went down, and healthcare also briefly went down, but never went down either during that same time frame. So your safety trades all were positive almost the entire time that XLK was going down. So because they held up better during that decline than during the subsequent bounce, which has been pretty much all XLK, they're still doing very well, and XLK is still struggling because of how much it has to come back up to offset the big loss that it had, to that August 5th low point. That was just at the close, not even talking about the low point that it had on that day. All right, now let's take a look at our trade idea of the day. Let's take a look at Roblox here. Kind of fitting the theme that we've been doing for the last couple weeks on the type of trade. Nice, good bullish pattern. The kind of pattern we'd like to see the S&P have, really. And the S&P just hasn't had it yet. But this is the kind of move we might be able to get from a NVIDIA earnings announcement. Now it would be a gap up to the upside most likely, but still that kind of rally, that kind of breakout above recent highs after a good strong move and then kind of a peter out on the near-term line. And then a breakout. Now, granted, it won't be for another week, but that's the kind of move we'd like to see. A nice, good breakout pattern, intermediate line crossing into the upper reversal zone, above rising market sentiment, which is also in bullish territory. You can see it's got a nice, good bullish pattern on this weekly chart, bullish Hakinyashi. We got the green arrow last week, a transition after just one bearish candle. Now we're back up to a pretty strong bullish candle as well. For the first candle, it's a pretty good size bullish candle. You can see we got the 3 green arrows on the chart with good volume the past couple of days, including on today's move. If you take a look at the 2-line version of this chart, nice good breakout above the point of control, above all these recent highs, rising MACD and stochastics. Everything's looking really, really good. If you take a look at the DMI, oops, there we go. The DMI, you can see a good breakout pattern there, above 30, below 20 on the negative indicator. ADX is starting to rise, which is exactly what we'd want to see. The RSI and the CCI look good, above 60. Above 60 on the RSI and above 150 on the CCI, so that's a good pattern. If you look at the weekly version of the CCI, you can see we're back above 100, so it's a positive sign again for that stock. Looking at the Ichimoku cloud, we have the beginnings of a new weak bullish trend well above the cloud, good strong positive rate of change. The green line there is above the blue line, that's all good. Looking at the Bollinger Band here, you can see we are above the upper band. Well, we were above the upper band. We ended up closing a little bit below it, but pretty much right on the upper band. Shifting to bullish momentum, and we're closing above the upper Keltner channel as well. So a good breakout pattern. So what I decided to do here was to do another long call vertical spread, selling the 30 delta, right around the 30 delta. So selling the 46, buying the 44. So this is our, this is the trade. This is the maximum, plenty of room for flexibility. It's to September expiration. You can see the same $500. So about more than a little bit less. Actually, just a little bit less than a 2-to-1 reward to risk ratio. So a good return if it works out, and very low risk if it doesn't. All right, well, that does it for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forums. Open up any new thread with any questions or comments you have. Reply to anybody else's thread, and let's keep this conversation going in between videos. Again, thank you very much for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon. Comment on the video. Join us at MarketScholars.com for free. Follow and like us on Twitter and Facebook as well. Have a great rest of your Wednesday night, everybody, and we'll see you all tomorrow.